everyone's trying to build something from scratch, seems nowadays. A product, a brand, startup. And what happens to most of them? They're broke, burned out, or back into a job within the next 2 years. What if I told you that the highest ROI move you can make, both personally and financially, is buying a business that it's already working? I'm talking about walking into day one cash flow, team, customer, systems, revenue. You're not guessing, you're acquiring. So check this out. So when you structure the deal right, you can theoretically put $100,000 and have $200,000 post-debt service cash flow. Day one. That's 200% cash on cash return year one. That's not a pipe dream, that's just straight up math. And that is what the rich do. They buy cash flow, they buy leverage. They don't start from scratch, and you don't have to either. I want you to think about this. Warren Buffett is known for buying stock in some of the most prominent Fortune 500 companies, but that's what the world sees. But do you know that Geico was one of those companies that he actually bought from scratch? Now, he buys many companies. Berkshire Hathaway buys many companies straight up, 100% of the equity. Elon Musk did not start Tesla, he acquired it. Facebook has acquired multiple rivals like WhatsApp and Instagram. That's the domain of the rich. That's how most of the biggest companies in the world grow. They don't grow organically anymore. They grow by acquisitions. BlackRock is the largest private equity group in the world. What do? They buy companies. Here is the startup reality. Here's most people don't know, that you don't read in Inc. magazine or Entrepreneur magazine, is that cash is king, especially when you're starting a business. So you need about 12 to 18 months worth of runway of cash, because you're going to be burning cash at a very high rate. You're going to have no income for the most part, because you're validating products, minimal viable products, etc., whether software or anything else you're trying to build. Tons of money going out the door. In fact, venture capitalists expect 90% of their investments to go basically to just go away, to die a small, painful death. Founders maxing out credit cards with no working capital, and a lot of them don't have a plan B. They don't really understand working capital, which is a killer. And 90% failure rate for startups, that is for the first 5 years. In the first 2 years, 50% will just go out the window. Let me tell you about the acquisition advantage. Now compare that to somebody who buys into a business that is doing $500,000 to $1 million in revenue today. What does that life look like? Well, you got day one infrastructure. You skip the phase of product to market fit, which is where most people struggle. They can't make the product fit, and they just run out of cash. Most businesses will run out of cash trying to figure out how to make money. You buy momentum instead of building from scratch. You have equity plus income plus systems already in place. That's so critical that you understand that, because it all plays out into the ROI math. So let me walk through the numbers and what does actual ROI look like when you buy a business under leverage. And how do we know that? Because we've been buying businesses for the last 3 years inside of our business acquisition mastery group, $65 million worth of businesses. We're scheduled to close 3 businesses this month, 3 businesses this month, and we have over 10 deals under contract. Now, the average business purchase, it's $900,000, cash flow about $300,000 a year. Now, the average 3 times SDE factor, I'm just generalizing. Some are more, some are less. SBA will finance 90% of it. So it's 90% leverage. So you get an $810,000 loan. Debt service is about $100,000 a year. Remaining cash flow about $200,000. ROI on cash invested, that's actually 222 to 1, about 200% cash on cash return. So think about where else are you going to find an investment. And in fact, a lot of the members of our group come from syndication and real estate and multifamily and commercial real estate and self-storage and all those real estate asset classes. It's very, very hard to get your cash on cash rate beyond the teens. Now we're talking cash on cash. We just looked at a deal today in which the cash on cash was 139% on year one. Where else can you find that? Now I'm going to debunk a few things as I go through my notes. But you can say, yeah, it's risky. Buying a business sounds risky. It's only for rich people. You're right, what I said earlier. However, it is for the rich because the rich got rich by doing this. Private equity has been around for 50 years, but the rich have been only gotten richer because of it. So yes, it is risky to analyze deals because most people don't know how to value a business. You don't go to college unless you go to a private tier, school, and you get an MBA from an Ivy League school, and they teach you. In fact, so we have some students with Ivy League degrees. Now, that's what we teach inside of our group, because I have over $100 million worth of deals to go through, and we have analyzed hundreds of deals. It is risky if you don't know what to do. But the thing is, there is a very cemented, hardcore process that we have inside of a group, and how to actually back into a defensible valuation that the bank will rely on. Banks are not dummies. They're not going to give you airball, which is an airball loan, which is a cash flow, basically a goodwill loan is airball. There's not a lot of assets to go. So they actually have to buy into a very fragile ecosystem. But because people don't know how to value that cash flow, they're overpay. So most people overpay on the businesses that they buy. They buy into the hype. They don't know what they're doing, and hence they overpay for a business, and they don't ask for working capital. So being an entrepreneur, it's going to be risky, but you really tip the scales on your favor by buying an ecosystem that is a proven record, has a proven track record. Today, we looked at a deal inside of our group. An auto business has been around for 65 years. Do you think after 65 years, they figure out how to actually make money? You bet they do it. They've been very consistent, getting $3 million worth of revenue every year. So that's the kind of real life education that we teach inside of our group. What makes BAM, what we call Business Acquisition Mastery, what makes us different? Tools, frameworks, live deal reviews. We do 3 to 10 deals a week. We just did a massive deal today and an even bigger deal yesterday. And it's not uncommon to do about 3 to 5 deals a week. Deep support community. We have a community of about 30 between lenders, attorneys, due diligence folks, people who do rollover for business startups, anybody who actually touching the deal. It's part of our community, and we're only getting bigger every day. And you get one-on-one mentorship from someone like me, who is a bona fide M&A advisor who has been top of the game for years. And because I've done it, right, I usually tell people buying a business is kind of like an apprenticeship. You gotta be really side by side with the practitioner learning how to do this. There's just a myriad of things where you can actually make major mistakes. So, what's the long game? Why is buying a business such a smart move for someone in 2025? If you're watching this video in 2025, you're buying freedom, not just a job. Now think about what's happening with tariffs. Think about what's happening in the world today, particularly in the US, with government. If you're a government employee, which was supposed to be the creme de la creme, the most secure job that they could have, it was working for the government. Not anymore. There is no loyalty anymore. You are a government employee. That doesn't help you with anything. Thousands of federal employees today are out of work. They are coming in. They're trying to figure, what am I going to do next? I invested 20 years and I got zero equity for the job. You cannot pass on the job to somebody else. So that is why you want to buy generational freedom. You want to control a cash flow producing asset. Cash is king. You have cash, opens up opportunities. But more important than cash is discretionary time. Time back is more important than cash. You get cash, you're going to get your time. Equity, income, and leverage. And you don't build a machine from scratch, which is so risky. And let me tell you, I have built multiple startups, and I have failure rates of 50% of every startup. So I know what it's like to succeed. Also, I know what it's like to fail with a startup. So click on the link below. Book a call with a member of our team. Watch our next video. We are here to help you buy a profitable business.